Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing precisely on the pound, which are essentially the big players in the market, so hedge funds. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that this market has just broken above a quite significant structure level for this market. In fact, we can see how this level was acting as previous support here, creating this rejection to the upside, turned resistance here after the market broke it to the downside and retested it. And now that the market has broken above the zone, this previous resistance is once again acting as support. And as the market is testing this previous monthly resistance turn support, we could expect a potential rejection away from this area. Dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, price action is quite clear. We have a market which was rejecting this previous level of weekly resistance here, and again here to the downside. However, now that the market has broken this level to the upside, all this previous resistance is now turned support at this level. So what we could expect is a potential retest of this previous weekly resistance turn support before then getting a rejection to the upside. We can also notice how in general, from here to here, we actually have an impulse. And if you have an impulse and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse leg. So essentially, if we take our Fibonacci here from this low to this high, what we can see is that exactly where we have this previous resistance turn support, we also have the 0.618 Fibonacci retracement. This shows that at this level, we actually have confluence of support given both by the 0.618 with the previous resistance turn support from a structure perspective. So this increases the probabilities that if the market will reach this zone, we will have a potential rejection to the upside away from the area. Going down on the daily time frame, this is where things get very interesting. Now, I did speak about GBPUSD quite a few times in the past. I spoke about it after this impulse and correction. From here, I explained all the reasons for which we could expect this rejection to the upside. Again, I spoke about it after this impulse. I explained all the reasons for which from here we could expect a retest of this level and then the creation of a higher high. And then from here, I explained all the reasons for which we could expect a retest of this level and a rejection to the upside. However, now that the market is creating this rejection to the downside, it's time for an update because it is actually creating a new pattern, as I will now explain. And by the way, I will link in description these previous analysis so you can go and check them out for more free education. Now, as I was saying, in creating this move to the downside, the market is actually currently printing a new pattern. In fact, the market is creating a new M pattern. In general, after the creation of an M pattern, what we could expect is a potential rejection to the upside for the completion of the pattern at the neckline, which is the previous support turned resistance. So here on the daily, if the market will go and test that support that we have previously identified on the monthly and weekly, there is then the possibility to see a rejection to the upside away from the zone, which would also complete this daily M pattern. Now, before we continue with the analysis, let's first go and see what we have when it comes to the commitment of traders precisely on the pound. Now, what we can see with the last report, net positions have been decreased. We went from 5.8k net positions down to 1k net positions, with 4,000 shorts added and 700 longs getting closed. So in the short term, the pound is getting weaker, as we are also seeing by looking at the price action, because institutions are moving to the bearish side of this market. However, at the same time, in the long term, we can see how we actually went from having a negative net positioning with more shorts than longs, 52k shorts compared to only 28k longs, all the way up to now currently having a positive net positioning with 58k longs compared to 57k shorts, so more longs than shorts. Therefore, in the short term, the pound is getting weaker, but in the long term, the pound is getting stronger. And keep in mind that if we're checking the data for the GBP, we're actually already checking GBPUSD because all currencies on the spot are traded against the USD. So as the market is creating this M pattern, how we could be approaching a potential reversal higher for the completion of the M pattern at the neckline? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, you will see that at the moment there is a massive promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to $97, one payment. And as an option, since I have partnered with the forex broker Blueberry Markets, if you move their trading to them, so if you open an account there, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and the price goes back to normal. And directly from here, you can join to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.